As far as the community and the positions that we have on, I mean, there's this overall kind of drag on the market, and it's basically a lot of hearsay, a lot of like, because no solid data is coming from any sources, because the Fed is actually admitting they don't know what's coming next. You're leaving a lot of people guessing without answers. And so that causes these swings in the market, but kind of an overall, almost a negative sentiment. Today, speaking of that employment situation, let's take a look at what we got. So if you take a look at these employment numbers, I mean, they are stellar, aren't they? You've got last month in August, they reported only 187,000 jobs were created. They went back and they revised that number up almost 40, well, yeah, 40,000, 227,000 jobs, but even more. Analysts were expecting only 160,000 jobs to be created this month, and instead they reported 336,000. That's like over twice as much as expected. That's really exciting. At the same time, analysts expected the unemployment rate to drop, and it stayed steady at 3.8%, which is still overall in time since we've been measuring unemployment rate, that's still on the lower side. So that's not that big a deal, although they expected it to dip lower. And what's interesting, Sip, is these two numbers come from two different surveys that the government does. So this is a survey of employers. This is a survey of employees, basically. And so it's interesting that employers are saying that we're hiring all these people, whereas employees are saying nothing's better for us here in the employment world. That's interesting. But at the same time, also private payrolls were up higher than expected. Manufacturing seems to be really exciting. On Monday, we got a report from the ISM group, and they said manufacturing was better than expected. The participation rate is strong. Average hourly earnings. This is a positive for inflation rate hawks because this is only at 0.2%. If we take 0.2% and multiply this by 12, we only get 2.4. So it's basically saying that wages are only going up 2.4% this upcoming year. Guess what? The Fed wants it to be around 2, maybe 2.5%. We're pretty much there with our employment numbers. So, you know, some of the folks are worried about this number being too high, which would normally be good news. But does that mean more interest rate hikes are coming? But then they come and they look at this number and they're feeling a little bit of solace. All to say, I think it's good news that's going to be good news, meaning I don't think this would be a reason for the Fed to continue to raise interest rates. At the same time, the CME polls investors, and I just wanted to point out this little number right here. So, as of right this minute, investors think that at the next meeting, which is going to be 1 month away, November 1st, that the Fed is 30, almost a third of investors polled believe that the Fed is going to raise interest rates by a quarter point, whereas two-thirds say they're not. But yesterday, if we look 1 day ago, this was 80% saying nothing was going to happen and 20% saying it. So basically, overnight, since that employment report came out, investors have kind of migrated from nothing's going to happen next month to I think there might be an interest rate hike next month.